When an asset is at all-time highs, it can deter people from continuing to buy. But I actually follow a process that I'm going to be sharing with you today, which allows me to continue buying at all-time highs with high probability. It's going to be especially useful if you trade gold or indices because these assets are at all-time highs a lot. So let's get right into it. So there are four main things that make up this process. The first one is kind of obvious. So let's say that this high here is the all-time high. Obviously, price has built bullish order flow and taken it out. Okay. Now, the first thing we want to see to keep buying is that buy program that took price through the all-time high. We want to see price continuing to respect that. So we want to see more bullish arrays being formed and respected despite the main all-time high being taken, right? So you want to see order blocks and FVGs being respected to the upside. Now, the reason that this is important is because if price was to break this buy program, then because we've taken the all-time high, which is essentially external range liquidity, potentially price will form a sell program to target a level of internal range liquidity, right? So let's say that there is a FVG within here. Potentially price is going to target that if we break that buy program. So yeah, obviously in that case, you're not going to be continuing to buy. Let's get into step 2 of the process. So when we're buying from these bullish arrays like this FVG or this order block here, we want to make sure that we're operating within the high probability expansion days of a weekly cycle. If you don't know what that is, I'm going to explain it to you. So when we look at how the week forms, we're looking for a power of 3. So for price to open up and move lower before it actually moves to the upside and reaches its target, and then it'll probably form a high and then taper off a little bit, right? You'll get a little bit of a retracement. Now, there are different weekly cycles that tell you what days are the highest probability expansion days within that weekly candle. And it all depends on when the low of the week is formed. So there are 4 main cycles that I teach in the Daily Bias course. One of the main ones is a classic expansion week, which is where Monday forms the low. And then Tuesday and Wednesday contribute to the rest of the expansion, right? So there are 3 main days in this weekly cycle. So we know that Monday, Tuesday, and Wednesday are the high probability expansion days that will make up this bulk of the move, right? The bit of the move that actually expands. So knowing that Monday, Tuesday, and Wednesday are the high probability expansion days of this particular cycle, if we get that particular cycle, then we want to make sure that we're buying on Monday, Tuesday, or Wednesday. Okay, if it's a different weekly cycle, then just apply the different high probability expansion days to it, right? If you want to learn all the weekly cycles, they're in the Daily Bias course in the Daily Cycles program, which has a free trial. Top link in the description. But let's try and stay on topic. So the first step is making sure that the buy program is continuing, and the second step is making sure that we're buying within the high probability expansion days of the weekly cycle. Let's get into step 3. Now, step 3 is probably the most important, and it's to do with your liquidity targets. So when we're operating in regular conditions like this, where we're not at all-time highs, you're always going to have liquidity levels on the left like this, which you can use as reference points for how far price is potentially going to run, and also as draws of liquidity, right? You have your liquidity targets already there on the left when you're not trading at all-time highs. But when you're trading at all-time highs, you don't have that luxury, right? Instead, price looks like this, where you would have taken out that final level of liquidity, right? That all-time high. And now when it comes to looking for reference points or liquidity targets on the left, there's simply nothing there, right? So you're not going to have a liquidity target on the left at all-time highs. But we still need a liquidity draw in order to be able to take a trade. So we have to find liquidity targets that are built on the right-hand side of the chart instead. Okay, and this is how we're going to do it. So when price is retracing into your bullish PD arrays, let's say for this instance an FVG, we want to see low resistance liquidity form, which is either going to be something like equal highs, right, where we form equal highs, something like that. Or if price was to form low resistance liquidity in the form of like a very slow retracement into that PD array and we get some kind of trend line liquidity, or potentially price is going to form a high and then beneath that there's going to be some kind of low resistance liquidity. And that's actually one of the trades I took the other day that looked like that. So the logic behind this, okay, when price forms a high that is likely to hold, it doesn't look like that. It looks like this, right? It's a sharp aggressive move to the upside and a sharp aggressive move back to the downside. When price forms a high that has a high probability of holding, that's what it looks like, okay? So if we know that, and we know that low resistance liquidity that looks like this doesn't have a high probability in holding, then we know that there's a high probability that price is going to return back to that level, right? So now we're able to take a trade that has a liquidity target based on low resistance liquidity that's formed on the right hand side of the chart, rather than using targets on the left. So that is the third step to the process to buy at all-time highs with high probability. We have to see price build liquidity on the right hand side of the chart because there's nothing to go off on the left hand side of the chart. Now let's get into step 4. I'm pretty sure you all knew that this stage was coming. Step 4 is the daily cycle. So once we have all three of those things, we have the low resistance liquidity, it's a high probability expansion day of the weekly cycle, this buy program is continuing to be respected. Now we're looking for the daily cycle, right? So we're simply going to wait for price to form some kind of daily cycle. It could be any of the 8 that I teach within that buy zone, right? So maybe we get the classic London protraction, right? Where London will sweep Asia and then expand to the upside. Maybe we'll get New York reversal, a New York continuation. Any of the daily cycles can be applied once you have those 3 other things. And altogether, those 4 steps make a very high probability environment to buy at all-time highs. But now I know that you want to see some real examples of what I'm actually talking about. So let's do that. Okay, so this first example is on gold on the 23rd of October 2024. So if you want to check it out yourself, which I recommend you do, you can go ahead and do that. So we are at all-time highs. If you don't believe me, just go and look at the chart. You'll see we're at all-time highs. Price has most recently taken out this external range liquidity. So the first step of the process is just making sure that price is holding these buy programs after taking out that high. So on the daily, you can see we're still printing consecutive bullish candles. On the 4-hour, you can see we had a little bit of a retracement, and now price is pushing to the upside, and we're still respecting and forming bullish arrays, right? Because we formed this bullish order block, which means that the buy program is holding. Now, the second step is to make sure that we're operating within the high probability expansion days of the weekly cycle. So if we look at the days of the week here, this down candle here is Monday, and then Tuesday has expanded, right? So Monday has formed the low of the week. Tuesday has expanded, which makes it a classic expansion week where Monday, Tuesday, Wednesday are high probability. So that means that Wednesday is also a high probability expansion day. So as long as we're buying on Wednesday, that is aligned. So that's step 2 of the process. Now, the third and most important step is the low resistance liquidity built on the right. So you can see on the 5-minute here, price has built up these equal highs, and then we've actually gone and swept out some kind of sell side liquidity. So if we think about how price forms highs regularly, it is like this, right? That sharp aggressive move to the upside and sharp aggressive move to the downside. This is clearly not that because we've formed equal highs, which tells us there's a high probability that price is not done running and not done forming the high. So price will likely go and target this low resistance liquidity. So now that all that is left is the daily cycle. I've got Asia kill zone here on the chart, and as you can see, Asia ran to the downside into that 4-hour order block I marked up and has manipulated this old low. All right, following that, price expanded to the upside, forming a bullish order block. Now, if you remember one of the previous videos I made about not needing a sweep of Asia session, you'll know what daily cycle this is. I'm going to leave the link at the top of the screen so you can check that out after this video. But essentially, this daily cycle is where Asia manipulates liquidity and gives a CSD so that we know there's no need for price to return back below Asia kill zone, okay? Because there's already been the manipulation. So now all we're anticipating for this daily cycle is for London session to continue the run to the upside. We have this 1-hour FVG here as the buy zone. Obviously, we already have the low resistance liquidity as the target. And then if I break it down on the 3-minute and put on London kill zone, you can see that it is London that actually added to the low resistance liquidity and then ran this old low down here. So London has still taken liquidity, which is going to sponsor the move to this upside here. So then we're just looking for the entry, and in this scenario we have a 3-minute change in state of delivery that potentially you could have entered off of. You could put your stop loss at the low. Now when it comes to this low resistance liquidity target, your target is at about a 1 to 2. So if I play this out, you can see that it played out very, very nicely, and we targeted that low resistance liquidity on the left. Now one thing that you want to understand is, because we're at all-time highs, once that low resistance liquidity is taken, you basically have no target. So you have to be kind of aggressive with your profit taking. Now I actually called out this trade to the Discord completely for free. If you want to join it, I'm going to leave a second link in the description so you can go and access that. Now let's get into the second example. Okay, so this next example, again, we're on gold, and this is on the 20th of August 2024, so you can check that out yourself again if you want to. We're at all-time highs. Price has most recently taken out this external range liquidity, which was the all-time high. And now we're looking for the buy programs to continue as the first step. So if we go on to the 4-hour, you can see price did give a bit of a retracement, but then pushed to the upside and actually formed a bullish order block. Okay, so we're still forming and respecting bullish PD arrays. The next step is to make sure we're in line with high probability days of the weekly cycle. So if we look when this low was formed, this is on Monday. Okay, so Monday has formed the low. Then we formed a 4-hour CSD. So if we know that in a classic expansion week where Monday forms the low, price will likely run to the upside on Monday, Tuesday and Wednesday, then we know that we're okay to buy as long as it's either Monday, Tuesday or Wednesday. So we have that criteria met. And now we need that low resistance liquidity, because as you know, we're at all-time highs and there's nothing to go off on the left. If I go onto the 1-hour chart, you can see that price actually builds up some really nice relative equal highs. Yeah, right, you see this high up here and these highs around here. They're all relatively equal, right, which is a bunch of low resistance liquidity, which shows us, right, that price currently hasn't formed a high which has a high probability of holding, right? It doesn't look like that, does it? Which means there is a high probability that price is going to return to take out these relatively equal highs. So that's very, very nice. Now the next step, the last step, is the daily cycle, right? The bit that we all love. So in terms of buy zone, we have that 4-hour order block we're already within, and we also have this FVG, right? I remember taking this trade, so I know that that FVG gets tagged. Now I'm on the 15-minute and I've played it out a little bit. You can see that Asia session formed these equal lows within that 1-hour FVG, and it also added to these relative equal lows. Now, going off of daily cycles, we know that if Asia builds up some kind of liquidity, we're looking for London session to take that out before expanding to the upside, and that is a London protraction cycle. So if I play this out a little bit, you can see that London session opens up, forms the low, right, taking out Asia's low just as we wanted to see, and then we get a big displacement to the upside, which formed this bullish CSD, right? So you have a 15-minute CSD. Potentially you could enter off of the order block there, or potentially you decided to enter off of the FVG. In terms of stop loss, I would put my stop loss there. That's based off of a SL at liquidity teaching that I have in the intraday course. And from there, we expect price to run to the upside, right? So if I play this out, you can see we do tag the FVG, and then price runs this low resistance liquidity. Again, this is a 1 to 2 at these highs, and we're at all-time highs and we have no other target. So it makes sense to be a little bit more aggressive with your profit taken, as there's no targets after this. Now this example and the example before that follow the exact same trading model, and this model is the one that I use for every single one of my trades, and it can be broken down into 4 simple steps. Those 4 steps I've put together in a free PDF that you can access for free with the 3rd link in the description. But this is how I navigate all-time highs and continue to buy with high probability. I hope you found value in this video, and I'll catch you on the next one.